Atik Shah is the co-founder and chief business officer of MProfit, a technology platform built to help investors and funds manage, track, and evaluate their investments across different asset classes. MProfit raised $2 million from some of India's savviest investors, including Zerodha's Rainmatter and Inam Holdings. It is wonderful to see an example of world-class software being developed in India and an example of a business born out of solving a problem faced by millions of investors around the world. What, to your mind, were the specific pain points that you recognize that investors or clients more generally were facing, and how did you think about solving that and making a business out of that?
That's a great question, and it actually takes me back a little bit in time to why we built MProfit. So I think in India, the investment ecosystem is very different from the US, and the technology stack that powers the investment ecosystem in India is also, I would say, it's kind of nuanced in a way, where you don't have the same type of technology implementations as you do outside of the world. It's very unique to India. I mean, obviously, we've seen how the payments infrastructure in India is amazing. On the other side, the investment ecosystem from a technology standpoint, I would say, is kind of fragmented, wherein there are hundreds of different brokers. There are so many different asset classes that people invest in, and the number of brokers and number of asset classes has just been increasing. The number of platforms that you can buy and sell investment products on has always been on the rise. At the end of the day, there's no centralized point of aggregation for the data that people have to deal with on a daily basis. You might have 3 brokers, you might be investing in 10 different products, and each broker is going to give you their set of reports, their MIS, their reporting. But at the end of the day, you might not get that reporting in the same format across brokers. It's always going to be disparate in nature. And that actually brings up a big challenge where you aren't able to consolidate data across different platforms in one place. So every broker is providing their own insights, and they're doing a great job with providing a better technology stack to their customers. But the one thing which was missing was that one centralized broker agnostic platform that can consolidate your data, that does not give you investment advice, that does not give you a transaction facility, so to speak. It just is a purely data insights platform that can just tell you that, look, this is where you're invested, and this is how your investments are doing, and this is the returns you're making on the investments, and this is how you're allocated across different asset classes. Even today, Krish, you'd be surprised that there are large family offices and corporates with big treasuries that do not have a legitimate technology system in place to manage their data, to manage their investments, and to actually be able to get proper visibility into where they're invested. And they're still struggling. They're still using Excel sheets. They're still having complex formulas that can break at any time. They still manually punch in data instead of actually automating all of this. And that's actually the problem we're trying to solve, and that's the problem we're solving. So yeah, that's where MProfit came from. And our ultimate vision and mission hasn't changed in all of these years. We essentially, Krish, want to be, to investment management and portfolio accounting, what Tally is for regular business accounting.
How has the company and the product evolved over time? Sure. Is it that it first started off as a very basic product that solved one or two very specific problems, and over time it's evolved into something much larger? And how is that entire process of constantly iterating and Sure. sort of improving the product gone?
Sure. So that's a great question. When we started MProfit, it was focused on giving someone visibility into where they're invested. Like, these are your investments, and this is what their current valuation is, and this is what the return has been on these investments. Most definitely in that journey, there have been a lot of additions, a lot of tweaks, a lot of pivoting. So I would say that, when we started out, it was purely about investments and just basically providing a tracker. Because, this was like in the early 2010s when, there wasn't, like, technology itself was, I would say, if you compare it to 2024 today, it was completely different. These were, talking about the BlackBerry days, when like people did not have, all of this on their mobile phones. And today, if you look at MProfit today, it's obviously a lot more feature rich, because the one thing we've always done is, we've obviously focused on growth and all of that, but we've always strongly believed that your product at the end of the day speaks for itself, and if you're solving a real problem, people will use your product. So you could put out as many ads as you want, but if the product does not solve a real problem, no one's going to end up using it.
Sorry, let me just come in here and let's use an example. Okay, let's imagine. So I'm an investor.
Sure.
I invest directly in stocks. B, I invest through mutual funds.
Right.
And C, I invest in PMSs. Let's imagine that those are my three investment avenues. So I today handle everything. There's one Excel file where everything's written down, and I'm manually punching in whatever, bought this and sold that today. So now I want to automate all this. So tell me, using my example, how would MProfit solve that problem in terms of automating things, and in what ways is it just that once everything is on MProfit, it's just a sort of one window into my entire investment universe, or how does that work?
No, definitely. So let's say you are trading with 3 brokers, you have mutual funds, and you have a couple of PMSs. You are a classic, multi-asset investor there. What you need to do if you use MProfit is you can basically automate the onboarding of data from all of these different platforms using MProfit. And the way we do that is, let's say for stocks, we've actually built integrations with over 700 different brokers now, which basically enables you to directly download a trade statement from the broker's back office and directly upload it to MProfit without manipulating or changing the file in any way.
Okay. So it's basically just uploading that note onto the...
So there are two sides to it. One is obviously the historical data, where you need to make sure that all the trades you've done since inception till present day are imported to the platform. If you go and import every single contract note, of course that's inefficient, because you'll have hundreds of emails with your trading history. So what most brokers do is they provide a back office trade file that you can download, and you get an inventory of all the trades that you've done. That trade file, regardless of which broker you trade with today, almost pretty much any broker, can be directly imported to MProfit, which cuts out that manual step of actually punching your trades into an Excel file. Once you've uploaded it to MProfit, your trades are up to date. But there are still certain nuances that aren't taken care of. The brokers can't necessarily take care of, like your corporate actions. I'm talking about things like, splits and bonuses and mergers and demergers and dividends that impact your portfolio. Now, these are not going to be provided in your broker's trade statement. Often things like dividends, they come directly to your bank. The dividend amounts are directly credited to your bank account. So your brokers don't even know what dividends you've received on the stocks that you've traded. So that's something which we also automate. So, all the corporate actions that are applicable on your portfolio in a specific history in a specific time period, MProfit can go and actually check which corporate actions were applicable on a certain date in your portfolio and apply all the corporate actions for you, so that your portfolio as on present day is completely updated. Because as you know, corporate actions will impact the holdings. If a stock is split from 100 shares to 200 shares, your broker's trade statement is not going to reflect that. But once you run the corporate action process in MProfit, you would see that. And once that is done, coming to the second point, where you're still trading day in, day out from today. Let's say you're an MProfit user. What you can do is you can set up a simple forwarding rule in your email inbox that forwards just that specific contract note file to your MProfit account. So that if you are someone who is manually doing all your investment accounting today, once you have imported your data to MProfit and you set up this simple forwarding rule for your stocks across all brokers, your daily stock portfolio will continue being updated. It's basically a set and forget. You set up that simple forwarding rule in your mailbox, in a Gmail or Outlook, and that automates that whole journey of keeping track of your investment entries. And this is not just holding level data. There are portfolio trackers today that can aggregate your holdings from using APIs, because there is a holding API infrastructure available out there. But the holding APIs are not sufficient enough to give you insights like portfolio performance, your XIRR, your CAGR, for example, your PNL, what your notional PNL is on your current portfolio. All of those insights is what you need actual trade level details for. And that's where MProfit comes in. That's why we have taken this route of actually importing trades as opposed to just holdings. And that's the big difference.
So one is the portfolio goes up and down in value organically as, depending on what you hold. But also there may be beyond existing capital, new capital that comes in, goes out. So, this can happen at an individual level, plus it can, especially if you're a fund or, handling external capital. So a challenge with that often investors face, especially retail investors, is actually figuring out what their true IRR or just more simply, what is the true returns that they are generating from their investments, right? Because if you just go by total portfolio value, it may keep going up, but that may be a function of the fact that every month you're putting in more money.
Absolutely.
It doesn't mean that your investments are necessarily doing well. So continue with the example. So what you were explaining is that once you put in all this data, historical plus, what's ongoing, it will essentially, at the end, it'll spit out a number and tell me that for these 10 years that I've been investing, I have generated whatever, 15% IRR on my investments.
Absolutely. So you are 100% correct about what you just said. A lot of people today, they are investments for decades, and these can be large family offices as well as retail investors. And family offices of course have a manual MIS structure in place, which is obviously not the best case implementation, but they have some kind of makeshift MIS in place, even the ones who haven't used a technology platform for this. But a lot of people just don't understand what their investment returns are. So what MProfit does is, once it imports the data, it actually can give you a true picture of what your annualized return or IRR is on any investment that you've done, that accounts for all the different cash flows in and out of your portfolio at any given point in time. It accounts for things like corporate actions as well. And it gives you very detailed cash flow level insights on your portfolio across different asset classes. So you might be trading mutual funds, stocks, you might be investing in FDs, you might be investing in some insurance products, you might be buying bonds, and regardless of what asset you hold, and if you're tracking it in MProfit, you will get an IRR number on that asset and your overall portfolio as well.
The real question that I have is that at the end of the day, I put in all this data across different asset classes, and I just get one window. On one window, I can see, okay, these are the things I own. That, for example, as of Feb 2024, these are the 6 different assets I own. And this is what they're worth, this is what I put in, and this is my return, and absolute return, annual return, IRR, whatever else. Is that how it works?
That's precisely how it works. And I would say, I'll go one level further and say that it's not just for one individual. At the end of the day in India, the way we invest as Indians is, we generally think of our investments and our financial health as a family. It's not just your individual returns, it's how you're doing as a family. So you might have your spouse, your parents, your kids, and at the end of the day, you're investing in every individual's names at the end of the day. And let's say, you might be buying mutual funds in your name, your spouse might be buying shares, your parents might be invested in, retirement products. And at the end of the day, you want to see because as a family head or, as someone who actually looks after the finances of your family, you want to see how your overall family's portfolios are doing. And even within a family, we've noticed that people have different brokers. Because let's say you are trading with, a legacy, an older broker, and let's say today your kids are investing with Zerodha. You will have 2 or 3 different brokers, and there's not a single broker that's going to be able to consolidate everything for you from an actual trade accounting standpoint. That's where MProfit comes in, where we help Indian investors consolidate their investments across assets, across brokers, and also across the entire family. So you get a true picture of your family's net worth in one place. You'd be surprised to know how little people actually think about diversification or asset allocation, and how even if they're tracking it, they would not have the visibility that they need. For example, let's say you're buying Reliance. and let's say you're also invested in Reliance through a mutual fund, and also you're buying an ETF that invests in Reliance. So how do you get a combined exposure insight into what your allocation is to Reliance or Kotak or any other HDFC bank or any other stock out there? So I think those are the insights that you need as an investor, and that's what we're trying to build and provide today.
Key sort of decision companies like yours have to make at some point of time in their history is whether to continue being bootstrapped and sort of just relying on your own cash flow and profits that come in versus raising external capital. We'll talk about the process of raising external capital in a bit, but I just want to talk about how you think about that dilemma and what was the thought process internally at MProfit in deciding between the two.
Good question. So when we joined MProfit, it was a completely bootstrapped company, and that helped because we could focus on building the product out to what it is today. Today, MProfit has a lot of different features and functionality, and staying bootstrapped until this last year has definitely been a good decision from that perspective in helping us build out the product and establish what they call product market fit, which actually means that you're tailoring the product to the need of the customer. I think last year, and the year before that, 2022 is when we actually decided to take the plunge and actually seek external capital. And I would say for us the journey was kind of unconventional, where for a significant amount of time we were bootstrapped, and maybe like 8 or 9 years later we decided to raise capital. And that's an interesting decision at that time, because the motivation for raising capital for us was twofold. One was obviously when we had achieved product market fit, we wanted to reach more people, because we weren't really spending money on a lot of marketing and all of that, and we still don't, for that matter. We're still, I would say, for us, word of mouth, organic referrals still is predominantly our customer acquisition strategy. And secondly, I would say technology. We wanted to spend more on building out more features, more products, more product verticals within MProfit. So when it comes to fundraising, that's actually the main motivation for us, was to be able to use capital as an enabler for these two things. One is build distribution for MProfit, and second is build a better and a bigger technology team that can ultimately develop more products and features faster.
Sorry, so you raised money from who?
So we raised from Nithin Kamath through his investment arm, Rain Matter. That's Zerodha's investment arm. We also have Inam Holdings that invested in us. Gruhas, which is backed by Nikhil, Kamath and Abhijit Pai. Oxano, which is a VC fund in Delhi, and Samarthya Investment Advisors. So these were 5 investors who invested in us. And I would say the process of raising capital was an interesting one for us. When we thought about raising capital, we initially thought that, since we have been a bootstrap business for all this time, we did not want to obviously go and, think of it from a traditional VC standpoint, because we wanted investors who can add value from a strategic standpoint also in our business. So I think that is, one of the big decisions that any company should take, that what kind of business are you from an investment standpoint? Are you a business that needs VC funding, or are you a business that needs a strategic investor? And I think that's not a one size fits all solution. I think that's a very, very important thing for someone to identify right when they start raising. That what kind of investor do you want to raise from? What are your expectations from a growth standpoint? What kind of business do you see yourself in 10 years being? So I think that was a question which we answered early on. And for us, we realized that Rain Matter, backed by Zerodha, given their philosophy, given that they are in the investment ecosystem and they are investing in companies that are in this space, they were the first investor that we approached. It was just a natural course of progression for us, because getting Nithin's buy-in on our product was definitely something which seemed like a validator for us, of course. So we reached out to them, and they were very proactive, and they had a couple of conversations with us. So we got on a call with them, and Nithin was there also. And the amazing thing which we found was that it was our first time raising. We'd never raised before, so obviously we had a pitch deck ready and all of that. But Nithin wanted to first look at the product. For him, it was, like, let me understand the product in more detail. And, we went into a lot of detail about what the product does and what kind of problems it solves. And, that's something which we found really refreshing. And at the end of those two conversations, I think Nithin was, he understood the problem we're solving for savvy investors and HNIs and family offices in India, and they came on board, and then we decided to look for other investors alongside.
Interesting what you were saying about Nithin, and what you said, like normally the standard sort of way these things work is they look at the financials and the pitch deck and all of that, and it reminds me of Bezos's mentality of that customer centricity, right? So ultimately, if you make a product that people like and charge a price that they're happy to pay, that's the best marketing anyone can do, right? That you get enough people who like the product, and it solves a very real problem. And I mean, you think of what Zerodha has done, and I mean, absolutely revolutionizes gigantic and age-old field, right? It's not like they invented broking. So it's I mean, I can appreciate. It doesn't surprise me that was his approach, right, even when it came to investing in other companies. And like you said, it's right in his wheelhouse, right? That ultimately serving investors, solving problems that investors face on a regular basis. And what's it been like working with someone like him? And of course, you have even the other 4 investors, all very well-known, savvy investors. But just your experience once the money comes in, what do you think have been some of the advantages that maybe you didn't necessarily think of at the time of raising, which you have now realized?
After raising, it's not like the culture or the mentality has changed. We still want to be product focused, and we've become even more judicious when it comes to deploying capital, because when you have raised external capital, you should be more mindful about how you spend it, in my opinion. And we've become more careful about tracking the ROI on various initiatives, including digital marketing. So I wouldn't say that our marketing budgets have multiplied after raising capital. So we raised close to $2 million. It was our first round. And overall, I think what has been the theme of progress in the last 1 year since we raised has been building out the product more, and fine-tuning it for a savvier investor. So we are adding more features that a savvier investor would need, someone who invests in multiple different asset classes would need, a support system standpoint. If you're solving problems for your business and having an investor like Rainmatter, they have been an immense pillar of support for us, regardless of what the initiative is. So, we've always like consulted them on new products that we're launching, or changes in various things in the organization. So I think that unconditional support definitely helps. And it's not only, of course, they are also very mindful about how we're growing and all of that. It's obviously the numbers do matter for any investor, but at the end of the day, if there is a problem that we're facing, having someone, and all of our investors for that matter, we're fortunate that they have always been willing to help and give us their time. So I would say that having them, so Nithin has a team, Rainmatter, that actually they are always available, regardless of when you email them, to help you, or to connect you with someone, or anything of that sort. So we've definitely benefited from that. On the technology side also, there have been benefits that we have obviously attained. Them having invested in us, they have since understood the problem that customers face to onboard data from any broker to MProfit. And what they did first amongst all the brokers is they gave us an API. And that API allows anyone who uses MProfit to directly connect to Zerodha and just sync all their historical trades into MProfit. So they're the first broker who's done that for us. And now other brokers also we're talking to who have appreciated the problem and have started responding positively. I think before that, we had obviously tried to initiate API conversations, but there's no skin in the game for a broker to do that for a third party. And that's fair, that's reasonable. But today, when automation is all the talk, other brokers also appreciate that. And in fact, we've had brokers come to us directly that, oh, Zerodha has done this API for you. We also would like to provide you an API. So at least that conversation has started. And since Zerodha has given us this API that makes the customer data onboarding easier, we've also integrated an API for mutual funds. So today, if you are trading mutual funds regardless of any platform, we have an API that we have worked on in partnership with CAMS, that directly you need to enter your PAN and it directly syncs all your mutual fund transactions. That's available, and that's something we've integrated, and we have definitely in the last year streamlined the ease of onboarding of data for customers. Right. Coming back to the point about PMSs, for example, I would say that I think you had talked about PMSs, and on that front, I think the one thing which HNIs like to do is actually be able to track the performance of their PMSs individually. So regardless of what the PMS manager is showing you, you want to have a record of all the transactions that have been done in that PMS, what the IRR is on that PMS. You want an independent verification of the returns on any single asset that you've given 50 lakhs, 1 crore to these money managers, and you want to get proper transparency and visibility into your investments. And that's actually one of the big use cases for our product also today, where any HNI, and we have large family offices also that use MProfit. They directly import their PMS statements into MProfit. So we've built importers for PMSs as well that can just directly read the files. So any HNI who wants to invest in a PMS, who's invested in a PMS and uses MProfit, they can just simply upload their trade statement, and they get an inventory of all the trades that they have done in that PMS. Right. And basically there, we are giving better visibility into assets managed by different advisors to an investor.
It's a great sort of checks and balances system of actually validating that is the investor, like the fund manager, doing exactly what he said he was going to do. Correct. I mean, they say that we have very low churn, but turns out every day he's buying and selling, something's off, right? Correct. So it's a great way to, it's a great sort of sanity check, and just make sure that you actually getting what you paid for.
Building on to what you're just saying, one of the big things in a PMS is the fees. Yeah. I mean, you pay PMS higher fees because they obviously promise higher alpha. And in a PMS, what you will see is, if you look at your PMS transaction statement, you will see that there are so many different kinds of fees. There are management fees, there are performance fees, there are custody fees. We've seen fund accounting fees, we've seen audit fees. So, like the investors are getting charged all of these fees, and these fees are being debited. Let's say you invest 50 lakhs in a PMS. These fees directly get debited from what you've done, what you have given them. The drawdowns are different. When they invest in the fund, that is different. So you will need to track how much you've given them, how much is invested, how much has been deducted in fees, how much has been returned to you, and ultimately all of these components do affect the IRR of that particular PMS. So of course they will give you a certain number on the PMS, the PMS's XIRR or the TWRR or whatever. Yeah. But at the end of the day, it's better for you to understand your own XIRR, and I think a savvier investor, the sooner they start this, the better it is for them from a visibility standpoint.
It's only when you go deep into these things you realize the number of fees and charges that you don't, as an investor, you don't even realize, right? You don't realize what you're paying for. Okay. That's an important point. But listening to you talk about MProfit and just how much goes on at the back end in the investment universe, to think of it more broadly. And so in the public markets, there are some companies that are considered as proxies for that, right? So there's like CAMS and CDSL and BSE, and NSE at some point will get listed. And correct. So I wanted to sort of talk about MProfit, but how you think about the future in such a company. Sure. When you've raised capital, and generally, I mean, if an investor's putting in money, obviously ultimately they're doing it for a payoff. Yeah. So how do you think about MProfit, say 3, 5, 7, 10 years down the line? Are you thinking of an IPO, or how are you thinking about that entire side of things?
No, that's a great question, Krish, and quite frankly, you're absolutely right that any investor who's invested obviously would like an exit, would like a return on their investment. We are kind of right now thinking about this. We haven't had any definitive I don't have a definitive answer for you on whether it's going to be an IPO, whether it's going to be an acquisition, whether it's going to be what the aspirational outcome will be. But definitely, I think that we're building out a product that has increasing value today to a savvy or an informed investor. So we think about it from the perspective of, let's continue solving these problems. Let's continue building out features that have mass appeal to a certain subset of audiences. So just a small digression there is that we cater not just to investors, we also cater to, as I was saying earlier, a B2B clientele, which is investment advisors, chartered accountancy firms, because ultimately these, and brokers and sub-brokers as well, because ultimately these clients do use MProfit to manage client money. So we're catering to both types of clients, B2C and B2B, and the canvas of product development overall is massive. There's a lot to achieve on the product development front. So I think to answer your question directly, Krish, definitely, we are working towards a certain outcome. Of course, it's a little early, of course, for us to say exactly what trajectory MProfit is going to take, but we're pretty excited. And as I said earlier, that the mission is to be sort of ubiquitous for investment management in India.